Traders, Anthony here, looking at the Aussie Swissy on the daily time frame. This is broken structure on the 1D. Okay, we have a break of market structure right here, and we're looking for further downside. However, at the moment, this is overextended, and we're going to go down to a lower time frame and look at an entry point. But before I do, we have this low over here that it's traded into. Now, there's liquidity resting under this candle here, right? This is tapping into these sell stops that are sitting under here. And I would imagine on Monday, we probably see this retrace. And if so, it would give us an ideal entry point. Now, the draw on liquidity would be this low over here, potential target, right? So we have these two levels that we can work with. So let's just go down the time frames and we'll look at a couple of different possibilities here. Now, understand that the markets have been fairly volatile recently. Okay, so one idea would be to short this on a pullback. So let's just say we see a retracement into equilibrium. Then I'd be looking for a possible short around this low here. That's one idea. Stop above the high, and then we could go for that's a 3R target. Well, that's idea number one. Now, understand the volatility, and I've been noticing quite a bit lately. I'll just show you something. Just going to draw a trend, right? So we see this pattern, right? But every now and again, we get that, and then continuation. So just be aware that smart money algos are going to be hunting liquidity, and this is one way that it happens, right? So, traders get comfortable and they sell on the pullback here, right? Okay, there's a retrace, there's a sell, stop loss below the above the previous high, right? So here we have the situation again. We get this pullback, and it might pause here. So if we sell here, we put our stop above the previous high, okay, gets taken out. So just be careful because that's been going on. Okay, here's an example right here. So you need to somehow factor this in, right? So we've got low, high, retrace, buy, low, high, retrace, buy, low, high, retrace. Now here's the thing, right? Your stop loss goes under this previous low. So let's say we bought possibly here, and we're looking for the previous low for our stop loss. Okay, so see what's happening. All right, so is this adequate, or do we need to pull our stop loss further back? That's going to give us a 2.2R outcome. So I'm inclined to actually go with the wider stop to see if we can avoid a little bit of volatility, especially Monday. All right, so let's just have a look at something else and then we'll wrap up the video. Monday candle. Okay, let's just assume we get a bearish candle for the day, and then we have a bearish candle for the day. So I consider that. Open, the high of the day, the low of the day, and the close. Okay, so the open and the high, well, this is going to open here, right there. Now the high, this wick, that I'm assuming will happen like that, and then we'll see the low of the day, and then the retrace to close. Now it may or may not do that at my target, but you get the picture. All right, so that's what I'm expecting on Monday, this pullback. Now, you could speculate and jump in with a sell order here, or you could go down to the lower time frame. If you're in front of the computer into the London Open or the New York Open, you could wait for price to trade back up on the 5-minute or a 15-minute time frame, and then just wait for it to break structure. Hope that makes sense. Okay, so it rotates and breaks structure, lower highs, lower lows on a lower time frame, and then that's your entry point. Okay, guys, that's my take on the Aussie Swissy. I'd love to hear your comments, so definitely leave a comment below. That would be awesome. And yeah, with that, hope you have a great weekend, and I'm looking forward to next week. See you in the next one.